Now, in one of our previous episodes, we discussed about the potential Sony-Z merger, a deal which is anticipated to be one of India's most significant in the media industry. Now, we highlighted how the merger aimed to establish a colossal entertainment powerhouse by leveraging synergies in content creation, distributing networks, and technological advancements. Now, the ultimate goal was to enhance the competitive edge of both companies within the media industry. Now, recognizing the high stakes involved, the industry has been anxiously awaiting the outcome of the so-called negotiations. However, as we previously discussed, the merger has encountered challenges related to regulatory approvals and disagreements over the leadership structure of the combined entity. Now, in the latest developments, on December 17, 2023, Zee Entertainment Enterprises Limited informed the Bombay Stock Exchange that it had requested Sony to extend the merger timeline. Responding on December 19, 2023, Sony rejected Zee's request for an extension. Sony expressed a keen interest in hearing Zee's proposal for addressing the remaining critical closing conditions. On 21st December 2023, according to Mint, Sony Pictures Entertainment and Zee Entertainment Enterprises Limited decided to grant themselves more time for negotiations. Now today, according to a report by Bloomberg, Sony is reportedly planning to abandon the merger with its Indian unit more than 2 years after the $10 billion deal was announced. Now, the primary reason cited is a brewing conflict over whether Puneet Goenka, Zee's chief executive officer, should lead the merged entity. Now, consequently, Zee Entertainment shares experienced a sharp decline of 10% to 249 rupees per share. Now, while reports suggest that Sony is allegedly planning to file a termination suit before 20th Jan, which is the extended deadline for closing the deal, asserting that some of its conditions have not yet been met, Zee has issued a clarification denying reports of Sony calling off the merger and have stated that they are committed to the merger and are continuing to work towards its successful closure. So while negotiations are still ongoing and there remains a possibility of a resolution before the deadline. Now, only time will tell us how this merger actually pans out. Now, in another significant development, the assets under management, or the AUM, of the Indian mutual fund industry has surpassed the 50 lakh crore rupees mark, exceeding the previous month's AUM of 49.05 lakh crores. Now, this notable rise can be attributed to the robust performance of the equity markets. Now, one of the key drivers behind the rise in mutual fund assets is the consistent and growing inflow of funds through the systematic investment plans, also known as the SIPs. Now, retail investors who are recognizing the potential for returns have been progressively allocating larger portions of their investment portfolios to mutual funds. Now, the sustained growth of the Indian mutual fund industry in the recent years can be attributed to various factors. Notably, the rise is fueled by an increase in financial literacy amongst investors, regulatory reforms promoting transparency and investor education, and a notable shift towards SIPs. Now, looking forward, the outlook for the Indian mutual fund industry remains optimistic, with expectations of maintaining its growth momentum in 2024. Now, this positive sentiment is underpinned by the strong macroeconomic fundamentals of the Indian economy and a resilient trend in the earnings growth as well. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.